Good afternoon, everybody. It is Monday night, November 9th. And for those of you that listened to our morning meeting today, it was very, very focused on what we do want to see in order to start really being aggressive and taking advantage of situations. And I can tell you that 80% of our firm earned money today. It was a very, very good day following up this morning's meeting and being ready to attack the market today. So we got a lot to talk about today. I'll try and keep it as focused as possible. The one thing I want to start out with is actually something that Eric had pointed out to me this morning. And if we could take a look at the spiders here on the daily chart, you can see here the spiders have not taken out this 110 number. You look at the NASDAQ composite, lagging by quite a bit here. It's about 46 points away from resistance. But take a look at the Dow here. The Dow is actually through the resistance level pretty significantly. Now, I want to also take a step back and take a look at the spiders. So we have a divergence here on the daily charts. That's really the first thing. Second thing to pay attention to is this day here, which I believe is the last day in October. The spiders did 324 million shares that day on a down day. Look what the market did today. 150 million in the spiders. We've rallied up past that point by about $7, but we keep going up on lower and lower and lower volume. Yes, the trade is long. Yes, we're not going to fight the trend, but we have two things going on here. We did 180 million shares less than that big down day at the end of August today on a 200-point up day in the market, and we have a divergence. So there is not significant volume pushing this market up right now. We are still trading long. Don't take it as I'm saying don't get long. If the trend is up and the order flow is up and that's where the follow through is, that's what we'll continue to trade. But we have to continue to be aggressive with our first loss being our best loss and not giving some of these stocks room to breathe if it moves against us, because there is not a lot of institutional activity on the right side of those trades. But we are trading long, and we continue to trade long until we see a reason not to. So let's go right to the charts, and we'll get into a few pretty good setups from today. I guess one of the most obvious ones, I'll zoom in. I got the daily chart here on the left, is we'll go to we'll start with the hourly chart because that's actually what we talked about first thing this morning. We talked about the fact that this is what's going on in the market right now, and this is where we came up to today. And we said right now we can't fight the short-term uptrend in the spiders in the market in general. And look what we got right out of the gate. Now we talk a lot about price persistency and what we want to see. Other than this bad tick here in the last couple of minutes of the day, this is what you want to train yourself to see. Now, obviously, you'd like to see more of this, more bigger green candles. But as far as what you do want to see, look at the higher highs, higher lows, higher high, all the way the entire day. So if we zoom back now out to the 5-minute chart, and we get a good picture of this here chart, beautiful, beautiful uptrend today. Now, there was not a lot of quote-unquote momentum, but it was clearly a long, and there was no reason to be anything but long. It was really just a question of where. And I have to be honest with you, the most difficult part of today was staying in a good position while the market was continuing to grind to the upside. So I guess if I could use RIM as one of those examples, we were actually long this morning. Beautiful explosion, and if I could actually zoom this out a little bit, right in this window here, basically between 60 and 60.50, pretty much in here. This is one spike down. It was only down there for about 5 minutes. It's basically in between here. It wasn't a question of whether it was a long or not. It was just a question of whether can you not get bored out of the position. And you can see where it finally actually pushed up. The volume increased. And you got a couple of nice pushes to the upside there. So today was a long only by a mile. Not a lot of tremendous momentum, but there were some really good long trades to hold on to. Today was a good day to exercise how long can I hold on to a good position without being shaken out of it or bored out of it. So I guess what we'll do is we'll get right into a few trades. Capital One Financial will be the first one. And the interesting one here is I want to point out a couple of different things. First and foremost is drawing the lines today to stick with a good trade. You start at the lows. Anytime you make a new high, you go to the previous low prior to that high. So here's a new high and basically shot right out of the gate. We push up, push up, push up. We make a new high. So now it's this level here that we start drawing the lines from. Okay, here we break the trend line, and we're actually here. So we have this spot and this spot as the box that we're trading in. So it becomes pretty obvious there's nothing to do until we trade in one direction or the other. Now, What happens here, you actually do break down past it. Now, let's put into the context of what's going on here. This is just a short-term break of this 5-minute trend. Look where you are on the 15-minute chart here. You're still well above the 15 period moving average, the 20 period moving average on the 15-minute chart. You're not getting short here. You're still looking for a spot to get long. This is just signifying get out of this long here. So you're getting out of this long here when you close below this break of this line here, the support level. Then you look for another spot to re-enter because of how far above the 15 you are, and you get this nice energy candles to the upside, which leads to 3 out of 4 more next candles having energy, and it's probably a good 55-cent trade right up into resistance again. And then we got a lot of this in the afternoon. So I want to point out that's very, very significant there. Nice trade to the upside with the rest of the market. Opening range breakout was nice. This is the first pause after the opening range breakout, which you can see here, this little consolidation here. First pause, push up. Again, because of how strong the order flow is, this is a get out of this long. It's not a sell short. You're still well above the 15, so you're looking for a nice spot to get long. Something we talked about in earnest on Friday is the difference between managing the entry and managing the trade. You want to see, this is a great setup here. You get this nice energy candle for 20 cents. Now you can manage the trade after you get into the entry. Next one I'm going to look at is IYR. And the interesting thing about IYR that I want to write is drawing consistent trend lines after it makes a new high. So we push up here, pull back, push up again. So now we're starting our trend lines from here. Okay, here's the high. Here's the prior low to that high. So we got a box. Trading in the box. Break out of the box. Hold the box as resistance. Now here we made a new high. So we are drawing another line. Again, working the charts. Working the charts, we continue to the upside, continue to make new highs. Eventually, you have to draw a new line. So, to me personally, this IYR I think was the cleanest one of the day. 3 different spots where the moving average, where the trend lines in the direction of this nice order flow to the upside was really good. And if we get into the hourly chart over here, this will be a really nice excellent. Look at that. Higher high, higher low, right up, right into the close, except for that last 20 minutes of the day, which is right here. So IYR is a tremendous stock to be involved with today. Boeing was another one. Again, very similar. Here is the opening range. Let's go to the 15-minute chart. Here's the opening range, which happened to be above the last couple of days. So we zoom it back out. Right in this window here, here's the first 15-minute candle. Good order flow on multiple time frames. By the opening range as soon as it closes above, which is this area here around 50.30. And pretty much just a question of hanging on to the trade up until that point. It breaks the trend line here, it comes in. But again, we're so far above everything else, we're not looking for anything except to either stay with the long or re-enter along. And that's about it. DOW was the next one. And this was another interesting one. Again, if we get in here and we stick with the right side of the trade. Okay, here's where we push to the upside. Again, this is kind of like just a slow grinding move to the upside, but ultimately this area here is where we break it. We do not trade below that level. Chop around. Again, big difference here. What's the point I'm making? Difference between closing below that level and trading below that level, very significant. Chop around from 12.30 to 2.30, close above it, and then we have another 35-cent run to the upside. And I think the last one I wanted to take a look at was CVS. And again, same trend lines we basically had all day, but here's the one that I want to point out to everybody. Right there. Look at that. Here's the high, chop around in this window for the rest of the afternoon. We finally close above this level, and it's a quick 30 cents right up to the highs. Nothing but longs today. Very, very light volume, which makes this rally suspect in the longer term. But as Eric keeps saying, yes, it's lighter volume, but yes, it keeps going up. So I want to comment on 2 things. We're still trading long until we see a reason not to, which means higher volume moves to the downside and lower lows and lower highs on the hourly charts and ultimately carrying over into the weeks where we start to get below the 20 and the 50 on the dailies. But that's not happening. We're still pushing to the upside. So the one other thing I want to point out is as tough as we did last Friday with the choppiness and as we went over this morning, a lot of the all over the place, right? We came back in a vengeance today, and as a group, we set a new intraday high today, and about 80% of the firm made money today. So I want to reiterate what I said in the meeting this morning. You guys know what you're doing. It's just a question of us getting a good market and some follow through and really pulling ourselves back on days that it's not there. So great job today, everybody.